Tesla sales are down and the stock is rallying. I'm Lisa Bernhard with Reuters, and here to talk Tesla and a whole lot more is Liz Miller of Summit Place Financial Advisors. Liz, Tesla gave vehicle delivery numbers today for the second quarter, and this is the first time that it had two down quarters consecutively year over year in sales. And yet the stock is rallying. At last check, it was up 8%. Explain why the stock is up.
I think the stock is up partly because the bad news is clear. For a long time, Tesla was about proving there's a real market for EVs, and that clearly is the case, and you have to give credit to Tesla for that. Now we've been on this incredible plateau, not just for Tesla, but for EVs everywhere. Everyone wanted an EV for a while. Now there's the backlash, maybe not so much. Maybe it's not cool to be green. There is definitely a change in perception, and Tesla has felt the brunt of that. So I think what we saw in these numbers is, 2 points. Now we have a trend. Yes, down, but not down as much as expected. A clear market here, just a question of what does growth look like going forward. So I think it's a reassessment of where the company is and that it is a legitimate player, and that the future is going to look perhaps more like a lot of other car companies.
So sales were down, but they were not down as much as Wall Street had expected. So Tesla already started a price war with other EV makers about a year ago when it started slashing prices, which of course pinches margins. What else can the company do? Interest rates, high interest rates are an outside thing. So what else can the company do itself to boost sales?
I think that one thing still sitting out there is looking for that next evolution in their design. Now that they've proven that it's a legitimate player, everyone wants what they always do in a car. What are your latest upgrades? What have you evolved? What are you doing differently that's more attractive? Very quietly, we're quite a number of years in here, and while there are multiple models, there really hasn't been a revamp of anything. And so I do think those that are fans are going to be watching for that and waiting to see, why do I go buy that model now when there's been no upgrade to it?
What about CEO Elon Musk's behavior or his political affiliations or his social media posts or even all the headlines about his just approved $56 billion pay package? Are those really starting to alienate potential buyers?
I think a Tesla buyer on average is a buyer that isn't going to be as swayed by that. And certainly the pay package was approved by the shareholders, so that tells us something. It didn't turn into a real activist fight per se. But certainly there's plenty of companies where people choose not to buy from them, or even we would say boycott in another way, if they don't like the culture of the company, the image, or the behavior. Tesla is 100% about Elon Musk and his image. So it may, but that's always been the case. He's often been a controversial figure. So I think a lot of buyers will make that a first choice in buying or not buying. And there's still a lot of buyers who are just going to shrug and buy the car of their choice, regardless of the CEO of the company.
So from Elon Musk now to Fed Chair Jerome Powell, who spoke today and said he's encouraged on the progress that the country has made on inflation, but he still needs more evidence to see inflation staying closer to the Fed's 2% annual target goal. So what's really the key here? Is it wages? I mean, what's the big holdup here that's getting us down closer to 2%?
I don't know what the holdup is. I really don't. I wish I could say I'm on board with all of this. What we heard in the messaging is certainly the PCE that came out the other week helped support the view that, look, the last mile of inflation historically has always been sticky, bumpy. Choose your word. It's not a straight line. And when you look at the inflation arc all over the world, every developed country has followed the exact same arc up and down that we have. There's nothing that unique about our situation. It's just that other central bankers have decided to prioritize in their country, growth over price stability, and they're starting to lower rates. We are not making that our priority. And so the Fed is talking about being incredibly data-driven, keep in mind that's not a historical place for every Fed that we have. We haven't always waited for the data to back up the decisions of the FOMC. They often are forecasters and making decisions on what they think will happen. So this data-driven approach is unique to Chairman Powell, and we will wait to see what that actually means.
Interesting. So speaking of that data-driven approach, we have the JOLTS report out today, which is the Job Openings and Labor Turnover Survey from the Labor Department today. So it showed that job openings unexpectedly grew in May, although in April that was revised to show the fewest openings in 3 years. So what's your takeaway from this report in terms of the jobs market and what it means for the Fed?
I love this report because we really can talk about our own data. We love talking about the quality of the data in other countries around the world. We're not perfect either. We try to collect the data, we try to make the reports, we're regularly revising them. And this is why we wonder about a Fed that is hanging on every last data point. Our data is really great over time at showing us reliable trends. Our data is not great month by month, as we just see in this JOLTS report. The revision to April, totally changes the narrative that we had in April when we were looking at a different take on our employment report. Now we're seeing a turn in the data the other way this month, and I'm not ready to draw conclusions from it.